What's going on, YouTube? Welcome back to the channel. Um, I'll admit, been a little under the weather, but hey, you got to do what you got to do, I guess. Um, per per request, someone wanted me to hit up on an update for Clearfield. Um, Straight up disclosure: I don't own this equity, so it's the video, a channel of transparency. So there's that. But Clearfield is a stock that I do follow up with, and so if you're interested in this equity, hey, consider subscribing. Um, this video is update per subscribers request though, because they just had earnings. Shout out to Stefano 2290. So I'm gonna make this a little quick update. Clearfield did report earnings on Friday, last Friday, I believe. We'll go here. They did a slight beat on their depressing going down in the opposite direction business. We'll talk more about that. And the actual stock is up. Stock equity is up, shot up about 12.71% in one day. So we'll talk about why I think that is, what's to come, what's the thesis, and some of my thoughts on it. Okay. So after reviewing the conference call and the slide deck, we'll take a look at some of the highlights here. Um, they actually pulled the trigger on $12 million worth of share repurchases under their program that was approved. So they got 21 million left to buy back stock. Typically, when companies when boards approve a buyback, that doesn't necessarily mean they're going to buy back the stock. This company, I guess they weren't bluffing, so they actually pulled the trigger and bought back the stock. So there's, and they talk about a new product, and they talk about BABA compliance and the bead related stuff in the earnings. And we'll talk a little bit about it. So, but real quick, as far as insider activity, there is none. I'm not seeing any. I'm not seeing any activity or buys or sells going on with any of the insiders. So that doesn't necessarily mean anything. All I'm seeing recently is just stock-based comp and options and stuff going on, but no direct buys or sells. All right. So now, with this so how come the stock is up? All right. I think there's a few reasons why this is. So there's a number of reasons why. So going back to that buyback, let's take a look at some financial statements, and let's actually look at the outlook of things and how it is. So let's look at their valuation. Let's look at their cash. All right. So as you can see here, I want to actually pull up a calculator. All right. So you see their market cap, right, is 391 million.53. All right. And they have this 168 cash. So I did the calculations with the 12 million. All right. With the 12 million that they bought back, it looks like they bought back 3% of their market cap in a quarter. That helps. All right. But if you look at the actual organic intrinsic value, all right, fancy words, right? So as an investor, how much is this company really, if you're buying this stock, how much are you really buying it for? So, I mean, we have to subtract the cash from the market cap. So it looks like 391.53. Bear with me. So in all reality, if you buy the company, you're really buying it for a little under $250 million. All right. So 246.19, 12 divided by 246.19. Do some math. So intrinsically, they're a little under 5% of the intrinsic value was bought up with that share repurchase. even though they have, and going back to their slide deck, you're going to see some pretty bad stuff here. And you're going to see some promising stuff as well. But quarterly revenues have been declining quarter after quarter. Um, and your profit margins are seeing a little contraction, so that's a problem too. Um, but you see your quarterly net income loss. All right, that's how we keep track. All right, of progress made. But you see this future outlook. You see the decline quarter after quarter, but their actual guide here is 29 to 33 from the loss of the quarter they just reported of 34. So that's definitely more of a bottoming out indicator as opposed to 50. So the pain is, I mean, there's still pain to come because they've projected out about three quarters or so. Um, so 3 quarters of losses coming up. So that's something to consider. Now their net income per loss per share is a little more dramatic. But let's go back. I think this is one of the, with the stock buyback and the actual and this cash flow statement. Let me see here. You see that their levered free cash flows are positive. In fact, they've been, they've been making more on cash flows than in the past. It's probably because in their business that's a there's a heavy capex requirement for materials in their line of business. All right, so yeah, they're cash heavy on their balance sheet, but that's something to consider. Where is this cash coming from? All right. Well, I'll tell you where it's coming from. We'll go to the balance sheet. It's coming from these short-term investments here. All right. So their position, I haven't looked at their 10K, but just like all the rest of the companies out there, they probably got some. Probably got some high-yielding treasury bonds working right now. All right, and that's what's giving them positive free cash flow, and their cash from operations was actually positive. So, so that's a good sign. All right. So you see this decline here quarter after quarter from 95, 85, 71, 61. These are dramatic, you know, 50, 34. These are dramatic revenue declines. To go from that much of a steep, dramatic revenue decline to go down to a guide of 29 to 33. I mean, we're starting to bottom out on revenue decline, and the as far as how much they're losing on EPS. I mean, they got so much cash that stuff doesn't really matter right now. um, let's talk about, and I think that this is the reason why they're up. All right, the actual outlooks and their valuation is so depressed, and them pulling the trigger on the buyback and stimulating some value for shareholders has helped them. All right, and that's one reason why I think the stock is up. Will these gains hold? I don't know. I mean, I just I just positioned. I don't know if you've been following along. I just positioned in this other company called SoFi, and I bought 10 grand worth of it. They smoked earnings. The stock was depressed, and it shot up one day. It shot up 20% on earnings, and then the next couple, 2 or 3 trading days or whatever, all those gains are just given away, and they're back to what they were trading at right before earnings. So you never can tell in this market. It just depends on what Wall Street likes and what it doesn't like. I will say this though, this is a cyclical play. So the government and the BEAD money, all right, the government is, and take it from me, I'm a government employee. The government is your best customer, and it's also your worst customer. They're going to pay you when they feel like they're going to pay you. So that's something to consider. If you go to the financials, you go to the balance sheet, this bead money, they're talking about slippage. They talk about slippage in the actual. Yeah, is there a potential for some of this to slip? They're talking about the bead program money and the seasonality of the weather and because there's intermediate companies, it's a B2B line, right? So they're depending on these telecom companies that are installing fiber. They're the customers that are paying Clearfield. Um, so the government, here's the thing about the government: nothing's fast. Nothing is fast when it comes to this stuff. So just because the bead money is coming, we might get a spike of activity at the back end of the year, or the company might get a spike of activity in the back end of the year. um, that doesn't necessarily mean the money's going to hit then. So the actual profits on the net income and is going to be there's going to be a disconnect there. So their accounts receivable is going to spike like crazy. All right, and accounts receivable means it's money owed to them from other companies. So let's say Verizon hires them to lay fiber or whatever. All right, and they're doing their capex to apply for the BEAD program, and the government money doesn't come in that quick. Verizon might tell Clearfield, "Oh, we'll put it on accounts receivable and we'll pay you in a year." So the money, the actual cash, might not hit till a year. All right, so that's something to consider. I'm not really too worried about that though. I don't think you should, because the balance sheet is so strong that it can hold this company over for, they can sustain some moderate losses for, I mean, years if need be. I don't know if buying back shares is the answer. See, the value proposition of this is, um, people are gonna, it's a cyclical play, so people are gonna invest when all the time is, because the market is forward looking. People are gonna invest in this company, and then in order to get the value proposition, when all of it hits and the net incomes hit, and when things are going good, this thing's going to rocket up, and then that's the time to sell. All right, that's the value proposition of what this is. I suppose 5G, had its, it had its hype, and then the hype died down when people realized it's going to take several years for this to kick in, and then now you might get a gradual growth rate over the next 4 years or so. All right, just like oil has its ups and downs. Oil might rally or stay really good for 4 or 5 years, and the time to invest in oil was when it was all down. It's kind of the same idea with Clearfield. um, so some to consider. That's, if you look in the prior videos, I don't recall, but I probably said something like maybe a dividend for this type of company is more appropriate to solidify a more of a proposition or value proposition, is a reason to buy the stock. So, but me personally, I like to position in companies where I like to buy it and just hold it for several years, like decades if need be, if I want to. So take what you will. These are my thoughts on Clearfield earnings. I think they're doing it for what it's worth. I think they're doing a good job. Um, they're doing a good job with cost management and getting through the tough times. It's a seasonal. I view this as a corporate seasonal business. All right, it's a seasonal type of business. When it's cold out, they don't do much work. When the weather starts clearing up and we get a little more better weather, like a little more warmer and in springtime, there's more labor to be done where they go out and do the job. So something to consider. But yeah, I hope you all found video value out of this video. And I hope you all are like finding value out of my channel. So thank you all for your support. Um, and with that being said, until the next time, have a good one.